You have probably heard the phrase, letting your money work for you. Obviously, the first guy who said that meant it figuratively, but hearing those words might have left you intrigued. Who wouldn't want to earn money by doing nothing? Well, technically, you are doing something called investing. It's the process of buying financial products like stocks, bonds, and mutual funds and selling them at another price. The goal is to make more from the money you initially put in. Unfortunately, there are certain risks to investments, so you have to be smart when choosing where to put your money into. You can hire professionals or do things by yourself. If you decide to do the latter, there are a number of financial service companies who allow you to invest in different assets, one of which is Robinhood, a commission-free stock trading and investing app available to Apple and Android. Robinhood attracted users into their platform because of their 100% commission-free trading with no account minimums. Unlike other stockbrokers who take a percentage of your investment and require a floor value, Robinhood doesn't charge a single penny for every trade you do, making it easier for anyone to try their app and start investing. That was the goal from which Robinhood emerged from. Robinhood CEOs Vladimir Tenev and Baiju Bhatt wanted the public to gain access to the financial market, letting ordinary people participate in the system. And so, they founded Robinhood in April 2013 and officially launched the trading app in March 2015. The name of the app was the same as the hero's name in The Adventures of Robin Hood, who provided for the poor by taking from the rich. That's not exactly what the app was doing, but they had the same notion of handing out resources to the public, rich or poor. The app was so in demand that they had around 150,000 registered accounts even before they officially released. And when they did release, a waitlist of 700,000 people wanted to participate in their services. With Robinhood's technological use of commission-free trading, they accommodated the often ignored investors, young people. Around 75% of the initial 150,000 users were born from 1980 and later. That is people in their 30s and younger, as opposed to the usual target market of 40s and up. Robinhood recognized that the younger generations most likely can't put up a decent sum of money into investments, let alone pay for a broker's fee. So they aren't given much importance in the financial world. And yet, older generations encourage the youth to invest early. How can they when they aren't given a platform which can fit their financial situation? Thankfully, Robinhood paved the way for them and the general public to invest their money using a convenient and efficient app interface. No more barriers and fees, just better access to financial information for active traders and first-timers. With an easy-to-access app that lets people research, invest, and monitor their assets, it's inevitable that people want in on the free access. Of course, people would prefer paying no fees in Robinhood than getting charged about $5 to $10 per trade on their competitions like E-Trade, Scottrade, etc. Robinhood claims that they were saving their consumers about $5 million in commission. Even investors of Robinhood knew that the app would do well. After all, it was founded by two men from the same generation as their target market. They knew the audience, and they found a need they can fulfill using their product. The efforts of these men reflected the growth of the trading company. Valuations soared in just a few years from their launch. In 2017, Robinhood was valued at $1.3 billion, which significantly increased by more than 4 times the following year. They also gained 3 million users in 2018, rivaling the 38-year-old online broker E-Trade. With these numbers, it's clear that young people are more inclined to invest when given the resources. It's a gate pass to early retirement, after all. From the $5.6 billion value of the company in 2018, they continued to rise, landing between $7 to $10 billion the next year. To add, Robinhood plans to expand their services in the UK. Unfortunately, with the recent events happening, this might have to wait. With more than 6 million registered users and 900,000 monthly downloads, Robinhood became one of the most popular mobile trading apps and US-based online stockbrokers. The continued growth of the commission-free stockbroker just shows how much investors believed in the power of free public trading access and how many people continue to patronize it. At this point, you might wonder how a free stockbroker app continues to function in the market. They weren't charging fees per trade like regular brokers. How can they earn revenue? Robinhood employs the controversial practice payment for order flow, which accounts for around half of its revenue. This practice means transactions you do on the app aren't done on a public exchange, but are directed to high-speed traders. By doing transactions with a third party, Robinhood receives a kickback percentage of the profit. Although other stockbrokers practice the same scheme, Robinhood received criticism and lawsuits for this. They took advantage of their noble goal of commission-free trading for the public when, in fact, they were doing the same as others. Meaning, the app isn't actually commission-free, as it makes itself to be. They were getting a fraction of the profit while maintaining their image built on having no broker fees. Not to mention, users aren't getting the best prices. From October 2016 to November 2017, Robinhood sold orders from their app only to third-party traders who pay for order flow. They're more concerned about what they can receive than what their users can. This controversial practice landed Robinhood with greater revenue than other stockbrokers, which is quite a big deal, considering the average asset per account on the platform is estimated between $1,000 and $5,000. This was compared to their competition with average customer assets yielding to hundreds of thousands. So even if they keep telling you trading on the app is free, you'll know that they're taking quite a chunk of your money. It's just up to you if you still want to patronize their fair system. Robinhood caused quite a number of arguments aside from this payment order flow practice. For one, Robinhood experiences system-wide outages almost every month, thereby preventing its users from making transactions on their app. As of March 2020, they've suffered 21 outages, one of which was a crucial time in the financial world. Robinhood became non-functional on March 2, 2020, the very day that Dow Jones experienced the largest daily point gain, and users weren't able to take advantage of this because of an error in the system. Although outages do happen in any smooth functioning technology, consumers are frustrated by how often Robinhood does and when it does it. Some users even consider leaving the app because they keep losing money on these outages. Others took things to the next step by charging lawsuits against Robinhood. After all, it's a time-sensitive service which takes its users' money, so it's only natural that they need to make a move on this problem and do it fast. Another problem with easy-to-access and commission-free trading platforms like Robinhood is that they fail to comprehensively explain how the system works. They were letting consumers dab into the market without fully understanding the process and the risks of every click. What's even more alarming about it is most of the consumers are first-time investors who have no idea how things can easily get out of hand, which is what happened to Alexander E. Kearns, a 20-year-old student who invested using Robinhood. The following contents are sensitive in nature. Please proceed with caution. Kearns was like any user, looking for a way to make money during the COVID-19 pandemic. He took up investing, building a small account on Robinhood. But one night, his small account received a negative $730,163 cash balance from the app. Imagine a kid in his 20s suddenly gaining a huge amount of debt without knowing how it happened. Kearns became troubled and eventually resorted to ending his life on June 12, 2020, leaving a note on his computer. How was a 20-year-old with no income able to get assigned almost $1 million worth of leverage? And he ended his note saying he had no clue on what he was doing. This incident stirred up conversation on how much people actually know about what they're doing when using Robinhood. The $730,000 cash balance wasn't debt. It was the result of an incomplete trading process. Kearns wasn't the only one to get confused by the sudden negative numbers. Other users also received negative balances in their account until half of their trades were executed. To address this interface issue, Robinhood is employing improvements on the app. However, it still stands that their lack of responsibility to explain these things brought the death of a 20-year-old. Investments are generally described in the future tense. That's why people keep using the saying, invest in your future. You are spending money now to receive something of greater value later. That's what Robinhood's commission-free trading service did. Investing has never been easier with just a few clicks on the app. People took advantage of Robinhood's interface and unlimited stock trading, thereby increasing the app's user count and valuation through the years. However, the accessibility and free service offered by Robinhood has its downsides too. They faced controversies regarding their revenue sources, system errors, incomprehensive regulations, and more, all of which stirred huge problems for Robinhood. Any company wants to gain trust from their consumers. It's only natural they do people right. Even more if they were a company taking loads of money off of them. Have you ever tried investing in Robinhood? Leave a comment below. If you're new to the channel, don't forget to leave a like and subscribe.